right, good morning, everybody. Let's get the show on the road. What do we got today? Well, we got JC here, as always. We got Chart Master Alfonso backstage. We got David Zarling today from Adaptiv. He'll be on at 9. We got Mornings with Mary. We got to talk about Beyond Meat. We have to talk about Beyond Meat. Don't let me forget to talk about Beyond Meat. That's my story of the day. We'll talk about what's on your mind as well. Good morning, chat. Smash the like. Where's my intro? Let's go.
Hey now, Spencer Israel, how we doing?
Pretty good.
Spencer was over at Casa Parets yesterday afternoon doing a little work, and I sent him to my local butcher for some good eats, and you came out with meat sticks? That's what you got at the butcher? Meat sticks?
I started listing, and then I had to do other stuff. I got some meat sticks. I got some cheese.
You get any ribeyes?
They're not getting any ribeyes. What else did I get? Gosh darn it.
Ribeyes. What are you doing?
I got these these sloppy Joe sloppy Joe egg rolls. Oh, they're so good.
So you got some of the pre-made stuff?
Oh yeah. Oh, they're great.
Good.
Yeah. That's fantastic.
They do a nice job.
Yeah, but I did not go hard at the butcher. I went
Dude, you should have gone hard, bro. The pork chops are mad good too.
I know. My wife doesn't eat pork chops, so what am I gonna do? Eat them all by myself?
Tell her to start. Honestly, they're good for you. They're delicious. They're cheap as hell. Like they're literally giving away pork chops these days.
I know.
Especially compared to those dry-aged ribeyes. They'll set you back.
I know. All right. Let's do some state of the markets here.
Please. I like Dawson's comment. Ribeye, greatest food on earth. My wife used to be a filet gal, and then I taught her about this thing that we call flavor. And she turned into a strip gal, and now she just goes right in for the ribeye. Very proud of my wife. Shout out to Morgan. Shout out. She puts up with me. She gets ribeyes. What a saint. All right. So let's check in on the markets. Dow futures down about 100 points this morning. S&P futures down about 26 basis points, 13 handles. NASDAQ futures down another 40 basis points as technology continues to struggle. Interesting bid remains in the bond market. Bid is probably a strong word. 30-year futures hanging in there right at 118. Interest rates are holding in strong. Bonds have stopped falling. I shouldn't say a consistent bid, but they have stopped falling over the last couple of weeks, which is definitely something that is different than it was before. Silver futures flat, gold flat, copper flat, oil flat. Nothing happening there. Got a little bit of dollar strength this morning. Kind of a risk-off pre-market. Not too bad, though. Volatility index hanging out just under 14. U.S. 10-year yield pushing 4.3% as this expectations for lower rates nonsense continues. I don't know what lower rates. U.S. 10-year yield making new multi-month highs pretty much every day. Checking in on the old funny money. Bitcoin hitting 60,000 Bitcoin as we speak, crossing over 60,000. Up 3,350 points today, 6% on the day. Ethereum up another 3%, hovering around 3,350. Here's a stat for you, Spencer. The stat comes from Eric Balchunas over at Bloomberg. There were more individual trades yesterday in the Bitcoin ETFs than there were in SPY or QQQ. So more trades in the Bitcoin ETFs than SPY or Qs, which obviously, if you've been paying attention over the last few years, get a ton of volume, right? It's the trade of choice for many of the institutions because it's so liquid. And by the way, this is before they've traded any options. So there's still no options traded on the Bitcoin ETFs. And a lot of the advisory firms still don't have them. And still more trades in the Bitcoin ETFs yesterday than in Qs or SPYs. And if today's action is any indication, my suspicion is we'll probably see that again today. All right, what does that mean to you, Spencer?
Eric has been tweeting pretty much daily about the activity in the Bitcoin ETFs, particularly IBIT, but all of them really. What did he say a couple days ago? I think he said that there was more volume in IBIT than there was like in the underlying on like blockchain, right? In Bitcoin, right? So IBIT is just swallowing all the volume, right?
Yep.
And I guess that's a good thing. Like you said, we don't even have options yet. It's not even an option.
Six and a half billion right now in net assets.
Um,
So we're almost at it's almost at a large cap stock level
yeah,
technically.
yeah. I mean, this is what we all wanted. So yeah, my
Did
take is
we?
that
Who's we?
the market wanted an easier way to access Bitcoin. This
Yeah,
is the easiest way yet.
yeah, that's true.
And
The
my
question, and then going in, the question for me was not, is it bearish that there's an ETF, right? Like,
yeah,
I guess we can agree that just an increased availability of potential demand is not bad. The question was, how bullish will it be? How much of this was already priced in? We're getting the answer. You got the initial knee jerk sort of, reaction, and it's just been a face ripper ever since as money keeps flowing in. What also is really interesting is that despite the lack of progress in the US stock market, particularly at the individual stock level, but you've seen a lack of progress also at the index level, right? These indexes aren't going anywhere. Bitcoin ripping right through that, doesn't even care. So that's a really
yeah.
interesting dynamic where you have, to your point, Spencer, that added element of demand opportunity introduced to Bitcoin, which is why Bitcoin's ripping and stocks can't go higher, right?
Yeah, my take yesterday that we wouldn't see new all-time highs in Bitcoin this quarter, not aging great.
Not aging well. Not
Not
aging well.
not
That's okay.
aging not aging well at the moment.
What did I
Well,
say? I said
you,
maybe this quarter, maybe
you
next quarter.
I think you said March is what
I
I think
hedged
you said.
myself a little.
Yeah.
Yeah, March I thought was a little aggressive. Clearly looking way less aggressive now.
Yeah.
We could be seeing new all-time highs by the end of the week at this
Look,
pace.
one of the things about flows, it's like a good and a bad thing is like sometimes you can find a reason for it, right? Like, or the reason is like just market dynamics. It's not an inherently bullish or bearish phenomenon, right? It just is. So the flows into IBIT could be the result of outflows from other ETFs, could be or mutual funds for that matter, or any asset class, could be the result of new money coming in. You don't really know. Could be like these. I mean,
By
not
the
that
way,
I'm.
we do know. We have that data. I mean, it's not in real time. We get a little bit delayed, but we do have that data.
Yeah, 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 yeah.
Combination of both is what it seems like.
It could be the occasional heartbeat trade, which is a weird ETF tax phenomenon that happens every so often.
Heartbeat trade. I've been at this over 20 years. I haven't heard that one, Spencer. You want to
We
explain that one to me? The heartbeat trade.
we won't get into that. It's a tax loss harvesting phenomenon. We won't get into that right now.
I'm into
Anyway,
tax loss harvesting. I harvested a ton. Was
yeah,
it last year? 2 years ago. In a down market, I harvested a ton. My account was like flat in this particular tax harvesting account I have,
yeah.
and I harvested a ton. I
Well,
didn't even lose any money. It was fantastic.
that's good for you. Um, I what's funny though is like yeah, every day we come in and Bitcoin is high and Ethereum is ripping again and it's great. And yet, just in my life, I'm not seeing the crazy euphoria. I think we probably won't see it until we get new all-time highs. I'm not even seeing it
Crypto
really
punks,
reflected in like the
185,000 for crypto plunk floor price.
I'm not even seeing like I consume like a lot of media, right? Financial media, and I am not even really seeing like anything to indicate that we are in like
I
euphoria
will let you
euphoria
know when my
territory,
high
right?
school buddies start asking me about it.
Please. Well, everyone's got their own
I
thing.
got
Everyone in the chat's got their own
the
thing.
day my
Let
dad
you
texted me about what's happening in Chinese stock market. My father has never once ever texted me about any stock market, yet alone the Chinese one. I didn't even know he knew that Chinese people had stocks. So that was, by the way, the Chinese stock market has been up every single day since that text message, for the record. So that's number
Mhm.
one. Number two, I can't share that information on Twitter because he does follow me on Twitter. He's definitely not watching any of our videos, so I can talk about it
Yeah,
here. But I don't want to mention it on Twitter because we can't lose the data. My father,
sure.
excellent contrarian indicator. We can't let him know that. Can't let him know that.
Yeah.
We lose the data.
That being said, there are certainly pockets of euphoria out there. We went from being euphoric about um, semis last week. This week we are euphoric about fake meat. JC,
Are we already going to the fake meat? Can we not go into the state of the markets and show what's
all
happening
right.
in the Dow Jones Industrial Average? Spencer's so excited about this fake meat. He goes to the butcher. He doesn't even
I
get
am.
ribeyes. He gets meat sticks. God knows what's in that. He's get,
I eat a lot of jerky.
he's
Okay,
eating meat
that's like my
sticks. He gets
go-to.
no ribeyes. Now he wants to talk about Beyond Meat. Like I get it's up 50% this morning. Great.
I don't own Dawson. I don't own any Beyond Meat. Let's get that out there. All
You
right.
do, but
I
do
just
you
think this is
eat the
interesting.
Beyond Meat?
I have in the
Have
past.
you?
I don't. I sure. I've
Oh,
tried it.
that's disgusting.
It's it's a little. It's like a little salty, and
A little salty.
but
It's freaking poison. It's literally made out of poison. Um,
I've bought it. I think I've bought it twice in my life, so I've tried it.
um, your Dow futures, at the same levels they were February the 2nd. All right, we're entering March. On Friday, we're entering March. The Dow hasn't gone anywhere all month, which is, I guess, par for the course for the month of February, which historically is not a great month to begin with. I mean, I know the month isn't over yet, but just generally speaking, even last week when you got a new high, even if for a hot second in a couple of these large cap indexes, there just weren't any stocks that were making new highs, right? Like, especially in the New York Stock Exchange. I know people are like, "Oh, well, in the S&P 500, it's the most new highs this year." Like, okay, the New York Stock Exchange is the world's most important stock market exchange, and you're
Mhm.
getting a broad data, and they're just weren't any stocks making new highs last week with the indexes, and then they quickly gave those up right away because, again, it's a market of stocks. Here's what we don't have yet, folks. We do not have any new lows. None. Zippity doo dah. And I want to get into this. I want to talk about. So Dan Russo is going to be on the show tomorrow. Do I have that right?
Yeah, you have that right.
Nice, nice. All right, so looking forward to Dan Russo. I know he wants to talk about market breadth for sure. One of the things I want to talk to him about is the new 52-week lows list. I want to hear his take on it. He always has an interesting perspective. His experiences throughout his career have been different than mine, but we were trained similarly. So I just want to kind of hear his thoughts on that. But for me, looking at the new 52-week lows list, like for what? Like that's like trying to build a snowman in the middle of the summer. Like that doesn't make any sense at all. Like why are we looking at the new 52-week lows list? There's nothing happening there. Nothing. Stock market, these indexes made new all-time highs last week. So what are we doing with the new 52-week lows list? There's nothing happening there. So to arbitrarily subtract the list of new 52-week lows from anything really, but but especially new 52-week highs, like why would we do that? Like that doesn't make any sense at all. We do not do that. Why would we subtract nothing from something for no reason, right? So we don't do arbitrarily subtract numbers from each other. I think personally, and I have opinions, Spencer. I don't know if you heard. I have opinions. I
Hmm.
think that we should be focused on the 10-day lows list, maybe the 21-day lows list, which is 1 month, or the 63-day lows list, or 3 months, right? Maybe we focus on that. How about baby steps? Why would we give a damn what's happening in the new 52-week lows list? There ain't nothing happening in the new 52-week lows list. That's like standing around on the 4th of July, looking around, wondering if it's going to start snowing. It ain't. It ain't going to start snowing, right? So that's like the new 52-week lows list. It ain't going to start snowing. Look at the 10-day lows list, 1 month lows list, 3 month lows list. We know that the 52-week highs list continues to deteriorate with every new high in the indexes. That we know. But mathematically, we cannot have any sort of correction of any kind without the prices of stocks falling. You see, that's how that works, and that's just math. It's not my. I know I do have opinions, but this ain't one of them, right? It's just facts. Can't have a correction without stocks falling. I got a good one here, Spencer. Here's one that I don't think anybody's ready for. Slide 4. How many people do you know are positioned currently for this black line to go up?
I mean, how many times have we asked this question in the last year? I feel like quite a lot.
Have we?
I mean, it's
I haven't.
on more than one occasion. Yeah, probably very few people, because why would they be?
That's right. That's what I like to hear, Spencer. So when nobody is positioned for something like this, in a hypothetical situation where something like this were to happen, and this line were to start going up, where crude oil is outpacing the S&P 500, Do you think that will be painful for a lot of investors, Spencer?
Only if uh only it's not so much if crude oil is outperforming SPY. It'll be painful if crude oil outperforms like technology,
And
right?
and and what is the
Or
largest component of SPY, Spencer?
yeah. But I'm saying getting more specific, or even just semis, or even in just Nvidia, right? That would be painful.
Well,
Crude oil going up isn't in itself, wouldn't be
of
painful.
course, but remember the denominator is not the US dollar here. The denominator is SPY, which is loaded up in the names you just mentioned. So I will ask again, if
Yeah.
this line were to go up, do you believe it will be painful for many investors?
Maybe I'll rephrase. Only if USO goes up and technology goes
And
down,
let me ask you
right?
this, Spencer Israel. If this black line is going up, do you think technology stocks are doing well?
They're not doing as well by definition. That doesn't mean they're going down.
Agreed. I'll ask you again. If this agreed with what you said, now I'll ask you again. If this line is going up, do you believe that those tech stocks
Oh,
you mentioned are doing
oh,
well?
like you're saying, just in a market where oil is rising like that. I guess I don't know, right?
Obviously.
But
I will ask you again. Do you think? I know you don't know. Thanks. Oh,
yeah,
Spencer doesn't know. Big shocker.
yeah, yeah.
In an environment where this line is going up and crude oil is outperforming the S&P 500, do you think, I know you don't know, do you think that
Okay.
technology stocks are doing well?
The answer I'm supposed to say is no.
I'm not saying
I
you're
know
supposed
that's
to
what
say
you
anything.
want
I
to.
just want to know what you think.
I know what you want to
I don't
hear.
I don't want to hear anything.
Okay.
I'm asking, right?
Yeah. No. No. Probably not. Right. I mean, like,
Probably not.
probably not.
Probably not. So here's
But
another interesting one. Go to slide 5. So these are since the lows in the fourth quarter in energy. If you could zoom in there so you could see the y-axis a little bit better. I should have increased the font on the y-axis. My fault, guys. My fault. My B. My B. Listen, I know I come out with some good charts. This is just unacceptable. This is subpar, and I apologize. This is my bad. The y-axis font should be much bigger. So my bad. I'm not proud of it. I'm not proud of it. But let me just explain to you what's happening. So up at the top, you've got UGA. So we're talking about unleaded gas, USO, which is crude oil, and crude oil ETF, and then crude oil futures. So up 14, 16%. I know, Dawson. I'm sorry. I'm sorry. I This is unacceptable, JC. Unacceptable. This is like one of those things where you put me in timeout. But my point here is that the commodities you see up top, even heating oil, the four on the bottom are all the stocks, right? So you got oil services, the integrateds with the XLE, you got the explorers and producers with XOP, the crack, which are the refiners, all underperforming the commodity. So I did a shitty job of visualizing this. I apologize for that font. Unacceptable. My point here is that
you were so excited for the chart, you didn't stop to
no,
look
it's
at
just that
people could
all
see
the
it.
commodities are outperforming all the stocks in the energy complex. That was my point.
Yeah. Yeah.
And I did a bad job of explaining it, and I apologize. I won't let it happen again. And I got one more. Go to the next one. So this is why one of the reasons why I think that just generally speaking, things with the S&P 500 as the denominator, in other words, long things with a short S&P 500 against it, seems to be a major theme I'm seeing out there. A lot of opportunities of owning other things while being short of the S&P 500 at the same time. This is one of those examples. Here we're looking at the S&P 500 relative to EFA. EFA is an index of developed stock markets around the world outside of North America. So think a lot of Europe, Japan, obviously, Australia, developed markets. So a lot of Netherlands, Denmark, Germany, Switzerland, France, UK, Japan, biggest one. We are now back to those former levels from 2022. And look at the weightings here. So obviously we got back to those former highs. Momentum is diverging. Fine. But for me, it's more of like, why is this happening? What's going on inside? The S&P 500 has 30% technology. EFA has less than a third of that, right? Industrials have S&P 500 is 8% industrials. IFA has twice that. Right? So as you see the German DAX and Japan and France making new highs, they don't have any technology. Stocks are very little, especially compared to the United States. They've continued higher while the United States has struggled to make any progress. It's because the industrials, right? It's the industrials. Also look at materials. 2% materials here in the S&P 500 because in America we don't care about materials apparently. 7%, so more than so 3 times the exposure in IFA for materials. Chemical stocks, things like that. Lind is a European company, for example. So I think this is an interesting theme that we want to keep an eye on. That is not like, wow, is the U.S. finally going to underperform? Is it finally going to be time to rotate into other countries? This isn't like this grandiose statement. It's more of a function of sector rotation that we've been seeing and rotation out of technology and into other areas. And a lot of these countries that don't have technology exposure don't have those problems. Now, to be fair, they also didn't benefit from the technology like the United States stock market did for so long. So it goes both ways. Last chart I want to show, which is just something that I want to talk about with Russo tomorrow. Throw the ratio charts here.
Real quick, one quick question. If you
Mhm.
wanted to rotate out of technology, right? Would you do it with some of those global indexes that you just talked about?
I
Would
think
you
that's
do?
one. I think that's one way to think about it. If rotating into some of these other indexes, that's an easy way to do it.
Yeah.
It's one way to do it. There's no single way. It depends on what you're trying to accomplish.
Right.
I think even keeping it simpler, just understanding the rotation among the sector components and understanding that in America, some of these sectors might not have such a large weighting compared to some of these other countries, but we still have those stocks here.
Yep.
Like materials might be 2% of the S&P 500, but we do have material stocks. Energy might be 2 or 3% of the S&P 500, but I don't know if you heard, we have energy stocks, right? So and also a lot of these stocks in a lot of these other countries, particularly the biggest ones, trade on U.S. exchanges. So I just mentioned Lind. Lind is not an American company; it's the biggest chemical stock in the world. I don't know where Lind is from. Is it UK? I think it's UK. Whatever. It doesn't even matter. You could buy it on the US exchanges. And a lot of these stocks, like, ASML, the Dutch Master, is a Netherlands semiconductor. You could buy it here in the United States. Petrobras is Brazilian energy. You could buy that here in the United States, right?
Yeah.
So a lot of these stocks that are around the world, some of the big ones, Alibaba, Baidu, obviously, all these things. But there's plenty of different ways to sort of express this. I'm looking forward to talking to Mr. Zarling about how he thinks about this, because Mr. Zarling comes to this, fork in the road or predicament or question from a different perspective than me, right?
Yep.
He manages an investment advisory. He has families whose money he manages. I only have to answer to my wife. And my wife, she's a tough cookie. I got to answer to my wife and the IRS. That's all I got. So I look at the world from a different perspective. I also run multiple strategies, right, to manage wealth responsibly. So I look at things differently. So I'm really curious to see what he thinks about that. Can you throw up the chart, please?
Yeah.
So this is something I want to talk about.
I was getting there.
This is something I want to talk about with Russo tomorrow. Shout out Dan Russo. So there's a misconception out there that I see all the time, and I guess people just haven't done the work. But just because the equally weighted S&P 500 is underperforming the cap weighted S&P 500 doesn't mean market breadth is deteriorating. It's not what that means at all. You saw a lot of that last year. It was like, oh my God, the market cap weighted S&P is so much outperforming the equally weighted. And let's remember what's going on here. The market cap weighted S&P 500 is going to give a higher weighting to the biggest companies, right? So the Amazon and Apple and Microsoft, Nvidia, Tesla, they're going to have the largest weightings. But when you look at the equally weighted S&P 500, they all have the same weighting. So it eliminates that. And it doesn't make one better or worse. It's just a different calculation. So understanding that technology is loaded up in one of them, but it's not in the other one. If technology is outperforming, if large cap growth is outperforming, then the equally weighted S&P 500 is going to underperform. That's just what it is. It doesn't mean that the market breadth is deteriorating. It doesn't mean that the bubble is popping or there's a new bubble or we're going into a bear market. It just means that tech stocks are doing well. And by the way, when you go back and you study every single bull market going back 100 years, in pretty much every single one of those bull markets, technology is an outperformer and a leader. Like every one but like 1 or 2 bull markets in history, technology wasn't a leader. So, technology doing well is not a bug. It's a feature of a bull market. So expect the market cap weighted indexes to outperform in a healthy market environment. There's nothing wrong with that. So I just wanted to clarify that. And then, by the way, so that's that blue line there in the middle. The line on top in black is small caps versus large caps. Notice how it looks exactly the same. You see, because these mega cap stocks are large caps and the small caps don't have that. They got a bunch of regional banks and biotechs, right? And then you see the same thing in value versus growth. You see the same thing in the Dow Jones Industrial Average versus the NASDAQ 100. Why? Because the numerator in all of these ratios doesn't have the amount of tech exposure that the denominator has in all of these ratios. So I just wanted to clarify this. It's not good or bad, or it's just sector rotation, and there's nothing wrong with that. So that's kind of like this misconception I see out there, that if you go and just do the math, it doesn't make any sense. It doesn't have anything to, which is one of the reasons I loved last year. Like, you had all these idiots lying to people about how market breadth is deteriorating because the equally weighted S&P is underperforming, which was beautiful because we knew better. We were buying stocks and we were profiting from the ignorance. And that's our job as investors.
Yeah. Yeah, basically every year of my career, I've heard, you just wait, one of these years, value is going to turn it around and outperform growth. And it did in 2022.
Yep.
And that's all you got, right? So I tip my hat to all you value investors, because it has not been easy for you. So I don't know how you can ignore the bottom blue chart, the bottom blue line on this chart. I don't know how you can possibly ignore that.
Well, also remember that small cap value did outperform for a few years. Small caps in particular. So at the large cap level, you've seen less of that, but you did from 2020 to 2022 see small cap value outperforming for 2 solid years.
Small cap value outperforming small cap growth.
That's right.
Yeah. Is it worth comparing small cap value to large cap growth? You wouldn't do that?
You could compare anything you want. This is America, Spencer.
Oh, damn. All right. Today I learned. Hey, should we bring on David Zarling?
I think we should.
I think we should. All right. David Zarling, head of investment strategy and research at Client First Tax and Wealth Advisors. He's also the creator of Adaptiv. They've got the Adaptiv Select ETF. Talk about that. He's got a podcast. Talk about that. I think David honestly set the record for the most number of charts sending us. He sent us, I think, like 19 charts today. We will not get through.
Not the point. Not the point. I appreciate all the charts.
Yeah.
David Zarling. Yeah. Someone's paying attention. Somebody knows how to do it out there.
All right. Well, let's cover as many of them as we can.
Yo, Jay, we've been friends for a long time. Make the call.
I mean, this is pretty professional, guys.
Nice show you got going here.
There he is, Mr. Zarling, trying to show me up with all his charts. I see you, dog. I see you.
Yeah, we love charts, man.
I listen.
Nothing wrong with that.
I respect it. I was in New York. I was in the city on Thursday, and I swung by Josh Brown and Ritholtz's office because we were all going to the bar afterwards, and I knew Dietrich was going to be there. So I walk in. Dietrich had just left, and he was going to go change and meet us at the bar or something. So I'm there talking with like their video guys, who I'm friendly with, obviously. And they're like, JC, we found someone who had almost as many charts as you. I was like, that's my boy. Because they didn't really know Dietrich, because they're video guys.
Yeah. You got to have charts like throwing spaghetti on the wall. You never know what's going to stick. So you got to go do your homework, do all the charts.
It's better to have too many charts than not enough, is what I always say.
Oh, absolutely. And the beautiful thing of relative strength, how do you not like that? Like you said, we could compare anything that we want. If we want to compare crypto exchanges to Apple stock, we can do that. I mean, it tells us where the relative strength is, and that's what I want to do for my clients. By the way, I still answer to my wife and my children and the IRS.
Got it. So
Closer to
you
my
not
car.
only do you have my problems, but you have others as well. Got it.
Yes. Oh, I don't view anybody as problems.
Right.
Uh, but
Yeah, we don't
it's
know
it's
who's
a fun.
watching. Wifey might be watching. It's not a problem. It's a blessing. It's a blessing.
It is a blessing. It's great. It's
Yeah,
great.
yeah, yeah.
If only I had a relative strength chart for a relationship to
That's right.
understand
There you
when I'm
go.
wrong, when I'm in the doghouse.
That's right. How do I know when I'm wrong? I feel like I'm never wrong. I just don't get it. No. All right, Mr. Zarling, why don't you tell the folks sort of like the perspective? I think it's important, 'cause we all view the market from a similar lens, but we do different things during the day, right? So why don't you tell the folks sort of how you look at the market, why you look at it that way, and what that means to your day job?
Sure. Long story short, I was a fundamentalist going back into 2006, and it became very apparent around that time that fundamentals didn't quote unquote matter. And there's career risk that happens during that time frame, both on the upside, right? Because 2006 to 2008 was plenty of upside, and that's when I became a technician. Didn't know it at the time, but I became a technician. And the reason why we are purely technical here is really the fundamental narrative doesn't matter. And typically, by the time the fundamental narrative comes out, price has already moved. You see price move, and then the story comes out. We call it, wet streets don't cause rain. That's really not how this works. Price moves first. And so our shop is purely technical, price, trend, relative strength. That's all we focus on. We're very familiar with your research at All Star Charts. You guys do a tremendous job. We're very similar in our approach. We have a team of 4 here that we're in charge of the asset management piece. We're a holistic firm, which is an overused term. We use the term true holistic. We do taxes, insurance, financial planning, the asset management piece. We're democratizing the family office and bring it all together in one place. And so the way we look at markets is we do run models for our clients. We're fully discretionary. When you hop on our plane, we're flying the plane. You're not. If you want to go fly your own plane, you can. But we use charts to do that, and that's how we allocate. One of the biggest differences between allocating as an individual and as an institution is a lot of liquidity. I'm very aware of liquidity, especially when you go through an 08, 09 period where you go to the trade desk and they can't get you a quote back because liquidity is dried up. So you need to be really aware of liquidity. That's why this Bitcoin ETF thing is such a blessing. It's such a huge thing because now we have more liquidity on the institutional side to interact with a rising asset class. We want that. I mean, I think you highlighted it's a $2 trillion asset class now. 75% of it is Bitcoin and Ethereum, and there's going to be more to come. But long story short, we look at markets, price, trend, and relative strength. That's how we want to allocate. We run 4 different models, anything from a conservative to a really sparks flying off of it, ultra aggressive.
I'm glad you brought that up. I wasn't gonna ask you about it, but now that you mention it, so what were you doing with crypto markets in general before this ETF? How has that changed now? Has it changed at all? Like, I would love to hear your thoughts on that.
Yeah, so before the ETFs, you still had things like GBTC and BITO,
Mhm.
the Grayscale Trust, which we typically it's great product at the time, and it is now as an ETF. But the way it worked taxation wise is our clients would just get a letter, which is very ambiguous to the IRS. So we chose to go with BITO. It's a pro shares product that deals with futures, and so it's a known commodity. What you're going to get tax wise for that. So that's how we expressed it in the past. But now, admittedly, we do have a position in IBIT, and we're also expressing it through blockchain stocks. So CRPT Crypt, it's a first trust product that's exposed. Its largest holding is Coin, COINE or COIN. We like the way those things look. Both the exchanges and crypto look really, really good. And exposure to them, right, they're a little higher beta. They're going to carry some beta. So depending on the model, we're going to hold different slices. It might be 1%, might be 5 to 10%, depending on aggressiveness. But we're excited about it.
Yeah, it is exciting. I've been following this space every single day of my life for over a decade now. Um, Man, I was talking to somebody last night and I was explaining certain things and I was like, yeah, back in the day things were hard. It was hard to trade some of these coins. You had to go to DeFi exchanges. Like I had to buy pollen on Telegram. Like it was wild in the day.
Right.
Like Now you can just buy an ETF. Like the kids have it so easy these days. And
Yeah, yeah, no, yes,
I was really
correct.
like thinking about like all of this, and I was like, wow, we've come a long way in such a
Yeah, the
short
irony
period of
is
time.
it's becoming more centralized, right? And more that's the irony. And I know there's a mantra out there at the opposite side, but the amount of asset, money that's sitting there ready to invest.
And
Because I like,
Strazza makes this point all the time, which by the way, Strazza's supposed to be on vacation. He's like slacking us all morning during our show. Big ups to Strazza. Give Strazza
I love
a heads up.
Strazza. He does good work.
Strazza's probably pissed that he's not here while you're here. We had Mike Hurley on the show yesterday. He's probably so frustrated that he's not here. But the point that Strazza is always making, to your point, it's becoming more centralized. A lot of these like laser eye people and everything like that, they're like, oh, screw the banks, screw the Wall Street. Like we have our own thing. It's like, no, bro, you want line to go up? You need the institutions, man.
Yeah, for sure.
What's the matter with you people? Like this.
Well, tokenization is going to change our life. That whole process is going to change. You want something to be liquid. You want to have a market on something with your house. Now your house is liquid. Now your car is liquid.
Yep.
I mean, it's going to be a beautiful future, and I'm excited to see it. I don't know what it looks like. I don't pretend to know that, but we want to be involved.
I give Chris Dixon a shout out all the time. I really enjoyed his new book. Have you checked that out yet, Zarling?
Actually, based on your recommendation, I'm through chapter 1. So I don't have a comment on it. I'm just through chapter 1.
Yeah, I mean, there's nothing really earth-shattering in the first like half of the book. It's kind of like a refresher of what happened in Web 1, Web 2. I highly recommend it. I've been recommending it since I really started reading it. I've been following Chris Dixon's work for a long, long, long time. Him and I are not buddies, but I have a lot of friends that are friends with him. Great book, excellent book. So everything that Zarling is saying, totally right. All right, let's get into your charts. I always steal all the questions because I have selfish questions that I want to ask you to get your perspective. All right, so we did that.
Hey, it's your show, man. I'm just living in it.
Listen, you brought up the crypto, not me. So,
Okay.
All right, so what do we got? What are we looking at here? Google Apple ratio. All right, I see you.
Yeah, I think there's some things going on here where you just have to be aware of what's going on with the large mega cap. Apple looks like trash. I think Google looks like trash. And then which is the worst trash is basically what this chart is. If the chart's going from upper left to lower right, Google's the worst trash. And so if you're going to have some type of hedging position and you want to hedge out some of that Mag 7, if Google's breaking below here, you're probably hedging with that. Just goes to the bigger theme of we're seeing, some weakness out of the larger cap names and some firming out of small caps. People, and you've done a great job highlighting, the breadth correction that we've been in since December. And it's wonderful. And that's what I need people to understand is that this breadth correction that we're experiencing is going to be a tremendous opportunity. It is a wonderful scenario as we head into the second quarter.
I think so
we
too.
can see. Go ahead. What's that?
Yeah, I think so too.
Yeah, and so this is just a smaller relationship chart to me, not the most important one. Like I said, I threw a lot of spaghetti on the wall. But you pick what else you want to cover. I want to talk about small caps.
Please. I like this chart that you have here, slide 4, Spencer. This is technology relative to small cap. So this is the XLK Technology Index, which is basically half Apple and Microsoft. Like Nvidia is like way down the list in terms of exposure. I'll actually give it to you right now. Relative to the small cap Russell 2000 ETF, which I don't know if you guys know this, but there are no mega cap tech stocks in the Russell 2000 small cap index, right? Is that right, Zarling?
That's right. The tiny hats are the tiny hats. They don't have big hats.
No.
So yeah, this chart pretty self-explanatory from the .com bust. Here we have a pretty logical behavioral level, right? We're studying behavior when we study price. And really, we always ask our questions, is this where we want to put new money to work? Are we going to gain advantage in technology over small caps at this point? Maybe, but we need to clear this area first. Now, there's a clue out there, right? Semiconductors versus IWM already cleared. So is it just going to be semiconductors or is the rest of tech going to follow? I don't know, but this is a logical level where in your allocation, you'd be saying there's really no definitive advantage one versus the other. And then when you take the absolute chart and where it's at, understand what's happening underneath the hood, such as Apple and Google, and then you see that they're auctioning up small caps at a higher level than they have in the entire range of the last 2 years. and you have a scenario on your hands, and maybe it matches the thing you highlighted before with oil and energy.
You like that? You like that a little?
I do, because, but I'll admit, we do not have exposure to oil. We're watching it.
Darling, nobody else does either. So
Yes, yeah. Well, and it's a really nice horizontal level. It's something that we highlighted in our team call 2 days ago. Just like there is a really nice level here when you look at energy stocks on an absolute basis, but also on a relative, you're seeing things reclaim a prior low that look like a false breakdown. So could you see energy work in the second half?
U.S. 10-year yield is pushing up against new multi-month highs every day. Why is it doing that?
Right.
Because the oil's about to crash? I don't
Right.
think so.
Oh, right, exactly. And then, it always ebbs and flows what their narrative is. Oil moving up is bad, or oil moving down is bad. It varies on each market environment. There's times where industrial production, like we've just had industrials, carry the way. Small caps, mid caps, large cap industrials have been a strong area. Does it surprise us if energy would follow that? Probably not.
Interesting move out of copper over the last couple of weeks. Certainly
Yeah.
keeping an eye on that. Also, you made an interesting point about semiconductors. I always like to, Strazza sometimes thinks that like I'm double dipping when I'm talking about semiconductors and then the XLK, but I think he's come around. They're just different. The XLK, I mean, granted, there are semiconductors in the tech index, but let's be serious, what dominates that? It's Apple and Microsoft.
Right.
And then you have semiconductors. So like I like to look at them while together. I like to look at them separately because they're two different things.
Yeah, absolutely. And it's the same thing with other technology like biotech.
Yeah.
I kind of wish I had been on here yesterday prior to the move. We do have a position there, and it's really about studying behavior from the past. So we had this really wonderful, you guys are going to talk breath tomorrow with Dan. I can't believe you're going to have two bald guys on in a row, but you're going to do it.
Half their guests are bald guys, so it's all good.
So when you look at what happened from that breath thrust, from a technical perspective, small caps are leading from that point. Now, have they pulled back into the area? Absolutely. On an absolute basis, have they firmed up? Absolutely. Then you look under the surface and say, okay, what led small caps during that period of time? So we don't get to be surprised by this move in biotech because that's what they were buying. When you look at the breath thrust that happened in November, December, they were buying biotechs.
Mm-hmm.
So maybe we need to shift our focus from large cap tech more to semiconductors and crypto and biotech. Those are the different technologies that we could be looking at. As you mentioned, I mean, basically the market, you can slice it up however you want, and it's worth paying attention to.
It is interesting. When we've seen the weakness in technology, all month basically or more, crypto markets continue higher. For a long time, we've been in the camp. I might still be. We're just, maybe this divergence is only temporary, that these cryptocurrencies are just more software stocks, right? We don't put cryptocurrencies on a pedestal. You might have to buy them on a separate exchange. It might have to do a little DeFi. How you doing? But it's, at the end of the day, it's the same thing. I don't know anymore. I don't know. Any thoughts on that? Like, how did you used to treat it? Are you treating it differently?
How to access it?
No, not so much access. How are you thinking about it? Like, we thought about it as kind of just more tech stocks, more software stocks, all these cryptocurrencies. And now I'm not so sure. What do you think?
Yeah, I think they're their own thing.
Yeah,
I do believe it's risk on behavior. Like if we're buying crypto, if we're buying semiconductors and we're buying biotech, that's risk on.
Now, probably not risk off, right?
Right. Yeah, like I don't think it's risk off, but it's buying crypto. I think we have to just say crypto is its own thing with this melding of tech and gold bug type sentiments. You just have to be aware that there's a ether over here. I'm going to use that term, ether.
Yeah.
Of individuals who are their sentiment is always going to be hodl, right? It's always going to be that. My clients aren't talking about crypto right now. They're not.
And have they ever?
Yes.
Interesting.
At the top.
No, man. Yeah, of course. Yeah.
And so now it's interesting, right? We, like I said, we have positions in some of these. We're reaching that 60,000 level. You have to ask yourself the question: is this where we put new money to work, or is this where we digest? When I look at the prior highs in something like Bitcoin, it'd be so healthy to digest up in this area. Now, it can do whatever it wants. Look what the S&P did; it went right through. It can, like, if it slices through, you have to be ready for that and partake. And that would be information. Hot knife through butter is information. It's a hot knife. So
Yeah, man. I
same
mean,
thing
with
with
these
these.
inflows, because remember, why does resistance turn into resistance again? It's because there's an overwhelming amount of supply relative to demand at those prices. Now that we have this monster new element of demand that was not present the last time we were here a few years ago, the question becomes, does that spigot of demand, is that enough to just melt like butter, right? Rip it right through. That's the
Yeah.
question. I'm certainly open to it. I've said all along, even before, I mean, I always said that, yeah, I think we get to 65, but I think we rip right through that and go to 100, 110, 120. You know how like you get the $100 roll and then a little bit more. So that 110, right? Like that
Yeah.
110,
Yeah.
120 seems like, and there's some extension, Fibonacci extension levels up there. So that's
Winners
sort of
add
in
to
my head.
winners.
What's that?
Winners add to winners.
For sure. So that's sort of where my head is at. And now that we're seeing this, I think that's probably still right. How do you think we absorb that supply in the mid 60s? You think it happens
Well,
fast?
well, if we go through there quickly, and the irony might be from a narrative standpoint, if they start launching some of these derivative Bitcoin ETFs, so you can short it, you can do all these other things
The
with it.
options are coming.
The options are coming. So if we're doing that, what people many misconceive the concept of shorting, that a lot of times shorting is just future buyers. And so if we start to implement that, I could see it ripping through there. Now, 65 would be a great risk management level. It's all about risk reward. What's your ratio? And if you're saying, hey, I've got a target, I mean, what is this base? I'm not even gonna do it quick, but the
It's a
base
lot.
it's a lot. So your risk if you get in at 65 or just north of that and use 65, like, hey, I'm involved above 65, I'm not below 65. That's why we use technical analysis, risk
Yeah.
management. Let's not overcomplicate it.
No.
I'd love to see, what'd you say, 100, 150?
100, no, 115, 120.
115. Okay.
Like a little bit, like the $100 roll and then some.
Okay. Are you using an extension target or using the base target?
All of them. The extension target, the base target, common sense of like that $100 roll and then some. Like a lot of things are like in my head, that has been the target for some time. At least the initial target. I'm not saying that we can't go higher than that, like to the moon and all that stuff. Like great. But I did want to touch on something you just said about how if you're a short seller, you are promising to be a buyer in the future. You are guaranteed to be a buyer in the future, right? That is what you are promising. If you are a shareholder, you're only promising to be a seller in the future, right?
Correct.
So let's just remember that short sellers are. I mean, to me, it's one of the greatest things about America. Like what do we have? We've got football, we got apple pie, we have the ability to short shitty stocks.
Like great.
That's America. Catch a ball game, eat a hot dog, short some equities. Like that's America.
Do not eat fake meat.
No, that's not. That's
un-American. Un-American.
Oh, George Washington would be rolling over in his grave if he knew that we're eating fake meat. Eating this fake meat, like it looks like meat, but it's not. Like I'd rather have like the vegetables, but made out of meat. Like give me some like ribeye carrots, or something.
Yes.
You know what I mean? Like that's
you just invented it.
That's what I'm saying. That's right.
I'd eat that. 100%.
Yeah, like broccoli, but that's made out of like pork.
For
or
sure.
something.
Yeah. But going back to your point about short selling, if people recall, going back to late 22, we had record short positioning, and all that was stacked firewood that reversed on them, and they had to cover. And it was one of that move late 22 into 23 that we did have a breath thrust at that time too. That was very much shorts buying, and that's okay. That's a market. I mean, I'm not here to tell where the demand comes from. I think it's important to identify which one.
And here's the thing that you mentioned before about what a blessing. I don't know if that was the word that you used, but essentially what an opportunity you think that is coming now in the spring for that, back half of the year, election year, rally sort of situation. The breath thrust that you've talked about, I think you've said breath thrust like 6 times because, and to be fair, there were just so many breath thrusts in, in November and December. Everybody you had the Zarling breath thrust that went off. You had the Zweig breath thrust. Everybody's thrust went off, right? But what that means essentially is that everything was going up. So if every stock is going up, it is mathematically impossible for there to be more stocks going up,
Right.
right? Because they're all
Right.
already going up. So mathematically, you need fewer going up. That's just what it is. And that's what we've seen. So
Yes.
just because you have this breadth deterioration doesn't mean that a bubble's popping or this like epic secular bear market. It's just math. Like
Yes.
not everything can go up and then have more go up if everything's already going up. So that's really what we've been seeing. And I think it's perfectly normal. We've seen it a zillion times. We're seeing it again. How long does it last? You know, how much does price sort of move based on all of that in terms of the indexes? We'll see. But
Right.
we've certainly seen that deterioration over the last couple of months. That's not a bad thing.
No, it's a wonderful thing, and I
Yeah, I
hope
think
people
so.
are doing their homework and looking where the strength is. You know, because maybe the large cap indexes roll over, and that's fine. You know, if we have a 5%, 10% correction, what are you going to be doing? Are you going to be looking at charts and your relative strength? Yeah, exactly. And you're going to be using that as an opportunity to get in.
Mhm.
You know, you look at small caps right now. Now, again, I'm not saying that from a relative strength perspective, you need to be just aggressively long small caps. But if you're going to accumulate, you're going to accumulate in this area below 2100 on futures or below 210. And you could be anything that's above that 2021 high VWAP, anything in that area, you could be accumulating, and then we're moving higher. And is it a catch up trade? I don't know, but I know we're 20 some percent off the highs, and we have the S&P already at new highs. There's opportunity for rotation here, and that the only way that's proven is on the relative chart if it stays above that horizontal level that took place in December. If it doesn't, you've got opportunity costs on your hands. You need to be back in the large caps, back in the S&P 500. Of course, looking at all your other charts as well, whether you're looking
When
international
we
or
talk
not.
about small caps, you mentioned biotechs. You got a lot of regional banks in there too. Almost as many regional banks as you do biotechs.
Right.
Do you need both?
No, no. I would be more like you if you look at like XBI versus IBB, right? That's two different makeups. One
Mhm.
is more equally weighted, one is they're definitely buying the equally weighted, meaning the smaller capped
Right.
biotech, they're buying that. And so we want to participate in that. When you look at XBI versus on its own, it's a beautiful chart. And then if you look at it versus IWM, you want to own it over IWM. Do you want to be in regional banks? I don't think so. Uh, you could express your small cap exposure with XBI, have some small cap industrials in there because all that does is go from lower left to upper right. There's ways to express it and take it to another level, right? You just start from the broad perspective of here's IWM versus S&P, here's IWM on its own, and then what's leading in that area. And there's definitely something going on in biotechs.
No question. And you even saw it at the bottom because for years, biotech has bottomed from those levels. So the fact that it did it again in the fourth quarter, I guess probably shouldn't have been that surprising, right? We've been talking
Right.
about it. But I'll add to that, you're talking about the XBI versus the IBB, which on paper is an equally weighted biotechnology index versus a market cap weighted biotechnology index. But when you understand what biotechnology stocks are, like, yes, you have the large caps, but you have a zillion small caps. So what ends up being is you're looking at really just small cap biotech versus large cap biotech is
Yes.
what that formula really translates into, to your point, David. It's really an XBI story more so.
Right.
And then by the way, when you go, I want to show Spencer, can you throw up the you're gonna love this, David. Can you throw up the biotech scan from yesterday? I think I have it here. Grant
And
drop.
while you're pulling it up, I'm just going to give a shout out to you because you helped define some of our process way back with relative strength. I mean, relative strength is where it's at. If you're a new technician out there watching this, you have to be using these ratio charts. Have to.
Well, I definitely appreciate that. I've been following your work for a long time too. Ian McMillan as well, for that matter. Here, throw up. Here, hold on. Let me just put them both so they both fit.
Ian's a
Actually,
tremendous
actually,
technician.
actually, you know what? Here, there you go. Throw up slide 2 there. Yeah, there you go. You got them both. Perfect. So here we're looking at biotechs sorted by new 52-week highs, and these are biotechs between 1 and 30 billion. Right?
Yeah.
Sorted by new highs. And then you can look at the other one, look at the next one. These are sorted by new all-time highs, but same idea, right? And
Right.
when you look at how many biotech stocks are between 10 and 30 billion in market cap, I think there's like 2 or 3. There's
Right.
like none of them. They're all
Right.
either way big or tiny, tiny, tiny.
Yep.
So just an interesting dynamic that you have in biotechnology that you might not necessarily have in most other sectors.
Yeah, and you can almost see the writing on the wall on this one. I'm forgive me for putting on a fundamental hat here, but if you start to see if the news starts to be therapeutics and biotech acquisition, you're probably too late. So some of these moves that we're seeing, do we get to see a consolidation in some of these smaller caps and they get bought up by the big guys? That's definitely a possibility. Or it's just a new regime for small cap biotech, and let's not overcomplicate it. But this is great. These are great tables.
Yeah, and you want to know something? When you go stock by stock, you talk about how great biotechs look, the chart itself and, relative and all that stuff, and all that's right. But when you go one by one and you look at some of these individual names, like, holy shit, dude.
Yes.
Holy shit. And then one more. I want to finish with this before we let him go. Slide 16. I thought this was a clever chart that you got up here. This is Coinbase relative to Apple, which has been the story, in my opinion. Apple making new 3-month lows practically every day, and cryptocurrencies absolutely ripping, sort of seeing that divergence between tech, like real tech and funny money tech, like, or whatever, however you want to
Right.
describe it.
Right.
But this is a great chart, David. Excellent job here.
Well, yeah, and the base is pretty wide and long with a perfect check back, pulling back into that area of polarity in the shaded area. I mean, it still has room to run. Will it have counter moves in the uptrend? Absolutely.
Guaranteed.
But, yeah, absolutely. But it fits what we're seeing. The eyes might just be on the wrong tech right now. It looks like eyes should be on small tech, biotech, crypto
Yeah,
tech,
and be careful with small cap, quote unquote small cap tech, like biotech, like, yeah, but that's more healthcare. Small cap tech is literally making new lows.
Oh yeah, correct. Sorry, I do not
every
mean
day.
PSCT. I do not mean that one.
Yeah, like small cap tech specifically, like
Right.
biotech we can consider tech, but it's in the healthcare sector.
Right.
Small cap tech sucks, right? So it's not just large cap tech that sucks. Small cap tech sucks too. Let me ask you this about Apple on an absolute basis. So here we're comparing it, obviously making new lows relative to Coinbase for the reasons that we described. 1, 2, 3, 4, 5 times now, Apple has tested this 180.
Yeah.
Does it break?
The price action that's happened over the last few months, if you look at a chart and you study it, it is different. The fact that you can gap a stock, now gaps have happened in the past in this stock, but you're talking about the mega cap and you're gapping it. There's some urgency going on in some of the selling that's going on. The real, and this is the general on the field, right? If this general goes down, what does the market look like?
I'm old enough to remember, David, when Apple was a big deal. It was the biggest deal of them all. And this was only a few months ago.
Right. You probably have to give, to answer your question, because I don't want to shirk it. By definition, as a technician, you want to give the benefit of the doubt to the trend, the larger term trend. So the larger term trend is higher highs, higher lows.
Sure.
Okay. Now, if we break 180, we're probably visiting 168. And if we can't hold 168, yeah, and we could be heading down to 130s pretty quickly.
How's the S&P 500 doing in that environment, David?
Struggling.
Yeah. How about the NASDAQ 100? How are they doing?
Struggling.
Yeah. You think energy's outperforming in that environment?
Could be.
Yeah.
Could be. I mean, that could be where you see the rotation. That's where you could continue to see things, the opportunities happening underneath the surface. I mean, how long have we been talking about narrow breadth? What if the opposite happens? You have mega caps struggling, and underneath the surface is this sprint.
Well, you saw that in 22, didn't you?
Yeah.
Especially in the back half of 22, like these large cap tech wasn't working. Everything else was working.
Yeah, exactly.
Small cap industrial, small cap tech, small cap discretionaries, they were all working.
Yeah, so you might have opportunities underneath the surface, but yeah, the cap weighted indexes are going to struggle. And not all indexes are the same, right? We know RSP. I do think it's a little bit of sentiment that YPS got delisted.
What's YPS?
It was a reverse cap weighted S&P 500. Phil Bakke had it out there. I thought it was a really nice product, a way to express the S&P 500 a different way. And here at these lows, we have to delist that product. Feels a little bit Global
Smells
X
smells a little
China.
funky.
Yeah, smells a little bit like a little bit of sentiment
Yeah.
capitulation. And we'll find out. The only way we know if this thesis is true is if we see small caps above 210, if
Yeah.
we see Apple below 180, and to just continue to use relative charts. I mean, you look at an Apple IWM chart that's similar. You could be looking at that to say, hey, here's some horizontal levels that I want to be looking at to guide my process.
When are you coming to New York, David?
Ooh, I'm hoping. I feel bad that I couldn't make it to Dubai for the CNT symposium.
Far. Dubai is really far.
It is, and I got a family, and I got teams I coach.
Yeah.
So there's a trade-off there. But I'm hoping I can get back there if the CMT comes back to New York.
That's
I'll
like a
come
year
out.
from now. You got to come before that. Come on. Meet me there. We'll go to a Yankees game or something.
Oh, that'd be awesome. You
Yeah, let's
name
do
it,
that.
I'll come out.
Yeah, let's do it. Let's set it
All
up.
right. Done deal.
Deal.
All
All
right.
right, David. Appreciate you being here. That was awesome.
Hey, thanks, JC. Thanks for having me on.
Adios.
Thanks a lot, David.
David Zarling. You know, I like,
Yeah.
David obviously formally trained in technical analysis. He's got CMTs that work for him and the whole thing. He brings a unique perspective. All our guests bring a unique perspective in different ways. I like the lens in which he approaches things, managing money for families and things like that. It's great.
Let's talk
Really
about
interested. It was really interesting. I know you're dying to talk about the fake meat, but I was just really interested in how he thinks about, the crypto dynamics and how that's changed. That was awesome.
No, I was going to chime in about how a dash for trash fits into this because we are seeing a dash for trash here in the last couple weeks, and Beyond Meat is just the latest example, which is why I want to talk about it, because it's not so much about Beyond Meat, it's about what Beyond Meat represents to me, which is trash, right? So when
high short interest.
Yes, high short interest. So when you come in and you see Beyond Meat trading up, well, it was up 100%. Now it's only up like I think 50%. But when you see that happen, and you look at you go around the room and you look at other trashy names or high short interest names, and you look at maybe like a C3 AI, or you look at a
Carvana.
even like
Carvana is the blue chip.
Carvana.
The blue chip trashy name is
the,
Carvana.
The blue chip, the blue chip of the short interest names, of course. How can I forget Carvana? You look at Macy's, you look at Zoom. Not so much high short interest names, but trashy names nonetheless. You go down the line, you look at GameStop and AMC, which haven't really played ball yet, but that's where my head is at. Is have we reached the dash for trash part of the cycle? We certainly have today in Beyond Meat. Sure, they came out and said last night that they were going to cut expenses like there's no tomorrow, right size their business, raise their prices. That's why the stock is up, whatever, what I say, 50%, 60%. That's why the stock is doing that this morning, because they said that last night. But again, high short interest, dash for trash. I'm here for it. So that's what I want to talk about.
We should all eat Beyond Meat burgers for dinner tonight.
No, we won't do that. But can we bring up the Beyond Meat chart, please, so we can look at that and just visualize.
You have it, or do you need mine?
This. No, I think we have it. And again, it's not so much about Beyond Meat as it is about this dash for trash, high short interest names, Carvana being probably the blue chip, as you say. And
isn't that hilarious? Isn't that the irony? And that's the blue chip shitty stock.
It is, man. It is. You can look at names like again, I mentioned C3 AI. Plug Power is also a good one. I don't know what that stock's.
Can you throw up slide 2? This is my chart, kind of just to show you where we're at. Throw up my chart, slide 2. So we are back to that former support.
Yeah.
Right. That's where we are.
But yeah, I mean, this is where we are in the cycle. We are at the point where the lower quality names, and I don't mean quality in terms of like the quality filter. I just mean using your eye test, right? Like low quality stocks.
It's a terrible company. It kills people as a business model. That's no good. Look at slide
and it's a great trade right now. So many great trades to be had.
Look at slide 3. Let's zoom in there. Look at new slide 3.
So many great trades to be had here, right?
See? So that's where we are right now. Back to that former support that turned into resistance, right?
Sure.
So if it can get through here, Like, talk to me if we're holding 11 and a quarter, if we're holding those levels, that would be impressive. That would be impressive. We're right there now. Probably not a coincidence. So that's a big one. 11 and a quarter. If we're above that, the squeeze is on.
11 and a quarter.
Squeeze is on.
Well, all right. We were above that just a
Let
little
him
while
dance.
ago.
Let him dance, Spencer. The market opened
I
7 minutes ago.
I know. I'm saying I'm on short squeeze watch here.
Let the people do the thing. Up, down, line
I'm
up, line
officially
down.
on short squeeze watch across the board.
Sounds like you've been
Because
hanging out with Strazza quite a bit. I was talking on the phone last night. He's like, oh.
no, I have not. I came to that conclusion on my own. Thank you very much. Thanks to a report like Beyond Meat. That's what gets me excited. Elsewhere on the news front, I don't know if you want to talk about any of these names. We have eBay, we have TJX, we have Baidu. Let's talk about Baidu, JC. Not so much a short squeeze, but a beaten down stock nonetheless. And it's down what, almost 5% today. On their report. Who was it the other day that was talking about China and damn near talked me into it?
I mean, we've been talking about it quite a bit. As soon as my
I
father
know.
texted me about Chinese stock
Yeah.
market, it's been going up.
No. Was it yesterday's show or the day before? I don't even remember. But I don't know. Take a flyer here.
But my question is, what are you going to buy? Right. So when I look at China, like, what's the vehicle? And there's just nothing that clear. The long China, short America, long commies, short capitalism, that's been working. But I don't know if that's just a blip on the screen. I'm not in it. I mean, it's been working all month, but I don't know. I'm just gonna let them dance. I you know me. I've been very risk off this month. It's been a funky market for me. I'm too old for this shit. We had a great year last year. I'm trying to keep my money. I don't need to constantly be YOLOing everything. Most indexes haven't done anything all month, just been a chop fest. So I've actually been blessed that I have not been partaking in this particular chop fest. I get heat on Twitter because I wasn't loaded up in NVIDIA. I'm like, NVIDIA hit our target, bro. It's not my problem anymore. Now you worry about it. I'm not trading this SMCI. Like,
no, I don't think you got heat because of you weren't loaded up in NVIDIA.
No, I'm just saying I'm getting heat because like I've been defensive all month. You know what?
Yeah.
It's been wise to have been defensive this month, as it turns out. Ain't that something, huh? A few. Do you see these gray hairs? You see these gray hairs? That's from getting chopped up in months like this, you see. So I don't need that in my life, man. I don't need it.
Maybe we should just buy K-Wave Leaps and call it a day, Dawson. Maybe you're right.
It's not a terrible idea at all.
They're
like,
not that
this is like the China's not going to zero trade, right?
Yep, exactly.
We'll talk about it in our meeting today, actually, and see
this is also this is just a classic buy the dip trade. This is a be a hero trade, is what this is.
Well, this is a China's never going to. This is a China's not going to go to zero trade, right? Because if you're buying leaves in China down here, it's not a bad idea, Spencer. Dawson, shout out Dawson. I'm with you on that. Let's check the pricing. I haven't seen the pricing. Might not be cheap. My suspicion is it's probably not going to be cheap, but we'll see.
I don't know. Yeah, like we can look right now. Let's not. Okay. Elsewhere on the news front, UNH, United Healthcare, DOJ opened an antitrust investigation there, so hit the stock on that. Apple, this is according to Bloomberg, has finally thrown in the towel on Project Titan. JC, do you know what that is?
I have no idea what that is.
Project Titan is Apple's electric car.
I didn't know they had an electric car.
They don't. They've been working on it in secret, but also not so secret for like 10 years now. And Bloomberg reported yesterday that they have actually thrown in the towel on that. They are reassigning all those workers to work on generative AI. And so no Apple car. This has been rumored for literally for a decade that they've been working on this in secret. And it is not to be. So
I am not one for rumors.
Yeah, okay.
My mother told me it was rude to spread rumors. That's what my mother said. Mom's
All
always
right.
right. Shout
All
out,
right.
Mom.
That's all I had on the. That's all I had on the news front. Was there anything of note in the hot corner today? I have to admit I haven't even opened it yet. So let's see.
Well, that's not good that you didn't open the
Yeah,
hot corner.
I know. Dude, I had a was running behind our morning, so I did not open it
So,
until just now.
sure. So we had close to $1 million transaction from the CEO of AMN.
Yeah. All right. Let's
So
talk
this
about
is,
that.
go ahead.
So hot right now.
So AMN has gotten the crap kicked out of it. That is the technical term. The stock is down just in the last 5 quarters, is down from 130 down to 50. That's not good. CEO stepping in, buying $1 million worth of this one, AMN. This thing's an absolute mess. So I knock yourself out. But $1 million is $1 million, not a Piker purchase. Nothing else really stood out. A couple of Piker purchases there. Warrior Met, an insider at Warrior Met bought 100 grand worth. No big deal there. 150 grand worth of Cummings. Another insider. Auto Nation, 200 grand. These are all Piker purchases. Nothing really stands out.
They are, but some of these charts look not bad.
Yeah, fine. But
Yeah.
just because, you know, somebody's buying 100 grand worth of,
Oh
no.
yeah. No, yeah. I'm with you.
Yeah. For me, the bigger one is the CEO of AMN buying $1 million. $1 million, $1 million. It's just that the chart looks
Mhm.
terrible. AMN, look at this
All
thing.
right.
Jesus.
Let's do a quick rundown, JC, and then we'll get. Oh, by the way, guys, Hot Corner goes it every day. It's free. Get the sign up. The link is in the description on YouTube. Get it every day. in your
Listen, if the
inbox. Let's
AMN
do.
starts creeping up above, 58, 60, maybe you get a squeeze towards the mid 70s. That's that trade, but whew, it's not an easy trade. Quick little rundown. Dow futures down 200 points this morning. Dow basically the same level it was a month ago. S&P futures down 30 basis points, about 16 handles, down towards 5,075. NASDAQ futures down 0.5%, down a full 100 points right now for the NASDAQ futures. Also at the same levels it was about 3 weeks ago. So NASDAQ, Dow, just no progress whatsoever for quite some time. Bond futures are now flat. So bond futures have given up all their morning gains. Silver down 60 bips, gold flat, copper down 60 bips, oil up almost a full percent this morning now. Quite the reversal there. Oil was down 1%. Now it's up 1%. And then you've got the dollar strength with volatility up slightly on the VIX, 13.6 on the VIX, and the US 10-year yield hanging in there just fine, right at 4.3%. What is higher interest rates and higher oil prices telling us about the about the market overall? And then finally, just quickly in the funny money, Bitcoin holding its gains up 3,300 points, almost 6%, holding above 60,000 United States dollars. This is not funny money, Spencer. These are American dollars, 60,000 American dollars for one Bitcoin. What do you think about that?
I'm here for it. But we all seem to be in agreement that as great as this price action is in crypto, we're nowhere near mania levels yet. Also, call me when we're at the all-time highs, because that's the interesting price action, is what happens when you
What's
get
the
there.
over
Right.
under on how long it takes one of my high school friends to text me?
Well, it really just depends on the all-time
Fair.
highs.
True.
Right. So like I don't think people will notice more broadly, people outside of our little sphere here, if Bitcoin just gets back to all-time highs and just gets rejected immediately, like that's not going to make headlines. I mean, it will for us, but that won't reach the broader culture, so to speak. But if you see Bitcoin at 70, Bitcoin at 72, yeah, then now we're talking friends texting, cousins, aunts, uncles, neighbors, your doctors,
How long does it
your
take
accountants.
after we hit 70 for people to ask?
It I guess it would depend on the day of the week. If it happened on a Friday, than by month, like over the weekend for sure. Like that's a classic.
I will let
That's
you
a
guys
classic.
know. I will let you guys know. My high school
That's
friends,
classic
my
crypto
high
right
school
there.
friends are notorious for texting me right at the wrong time.
This is gonna happen on a weekend. I'm sure
All right,
of it.
we'll see. I'll let you guys. I'll keep you guys
sure of it.
posted. If my dad texts me
Yeah.
about cryptocurrencies, then we know. But that
Yeah.
is definitely not coming.
All right. Well, yeah, 100K, sure. Yeah,
I
that's
think
a
it
long
happens
ways.
sooner. I'll take the
We're a long ways away from 100K though.
I'll take the under. I'll take the. I think
Me
the high
too.
school
Likewise.
friends questions start coming sooner than that.
Yeah. All right. Let's bring Mary on
Please.
here. Where's my Mary bumper? Did I lose it? No.
Hey, Mary.
Good morning, guys. How are you doing?
Oh, just another day in the life. Checking out major transactions, YOLOing Tesla calls, no big deal. No, I'm not YOLOing anything.
Because I don't remember a Tesla call going out.
It's what the kids do. They YOLO Tesla calls. It's just what they do. I don't do that. I mean, I guess I did a year ago. That worked out pretty well, but I'm not doing that now.
Worked out really well.
Worked out really well. Mary, so you happen to be the single person, I don't know if this is true, but you're definitely in the conversation.
I'm up there.
Who consumes more all-star charts research than anybody on the planet. We've got our super fans that might overtake you. Wouldn't surprise me one bit. You speak to them regularly. Mary is our all-star charts concierge. So any questions that you might have about all-star charts, Mary's the one. But personally, Mary consumes a lot of the content. She then executes in her own portfolio accordingly. So I'm always fascinated to hear what Mary finds interesting about what we're doing. Because what I think is the coolest thing, or what Strazza thinks is the coolest thing, we're super jaded. Mary brings a unique perspective on what she thinks is cool and valuable and where the opportunities for her specifically lie. So that's my intro on Mary. Talk to me. What's on your mind?
Well, so it's funny that Spencer said dash for trash, because quite frankly, that's kind of where I'm at right now. And that's where I've been, that's where I've been kind of like doing my fishing and, obviously know what you're trading. But, and David said some great things. And it's actually what I wanted to talk about today was, the last couple of weeks, and I brought the two charts. I've been watching XBI very closely. I've been watching IWM very closely, just because that feels risk on, risk off to me. And so the fact that they've had kind of the price action that they've had here in the last couple of days, then you've got some of the moves and some of the trashier laggards, equities. It feels kind of squeezy. It feels kind of risk on. And my question was to you, JC, and David kind of addressed this as well, was, are we looking at rotation from the Mag 7 or the large caps into these areas that have, the ARChy stuff and the small caps that have really underperformed? Would that be market health? I would think that would be market health. I mean, what's your take on that based on kind of the conversation that you had with David?
Yeah, I think it's less about a risk on, risk off situation and more about sector rotation. And they're just, if biotech's doing well, that's great for biotech stocks. How many small cap biotech stocks are in the S&P 500? Zero.
Right.
How many small cap biotech stocks are in the NASDAQ 100? Zero. How many small cap biotech stocks are in the Dow Jones Industrial Average? Zero. So yeah, if biotechs are doing great. And by the way, biotechs are doing great. And as well as nice as this chart is, the individual stocks look way better than the index itself. So yeah, but I think it's important for investors to understand that these are two different things, like two different things altogether.
Okay. So yeah, I'm doing some fishing in XBI, and looking at some of the holdings there and getting into Rangefinder, going through our research just to see what trade ideas we're putting out. And I've really been focused on the crypto stuff just because I started building into the position probably a year ago, and it's made the move that it's made. But quite frankly, I think that we still continue higher. You guys were talking about sentiment, and you aren't hearing from your friends. I'm not really hearing from people either. So
do you normally, by the way?
Sometimes a little bit. I actually have the owner of my gym is mining Bitcoin in his home right now, and so he's talking to me frequently about, what are you guys seeing, or what are you doing with your Bitcoin? So, but he's kind of got a very vested interest in it. So,
And he knows you're famous. He knows.
Right.
No, there's no fame there.
I don't know. Mary's a big deal around here. I don't know.
Oh my goodness.
Talk to me
So,
about crypto. Speaking of junkie, what
right. Yeah. So, we've been in the coin, we've been in the Mara, we've been in MSTR, we've been really focused on, at least from the All-Star chart side, how we could play this before the ETFs were released, how we could play this Bitcoin thesis through equities. And so, we've had all those trades on. What I am most excited about, and hopefully, we've been sending out emails. We have a webinar coming up, to a live event actually tomorrow, to talk crypto. And I mean, perfect timing, right? Because we've had such a great move, and we've got so many different things happening coming up with the halvening and the ETFs and future ETFs. Does Ethereum get launched as an ETF? There's so much other information that's going on. Plus these alts, are they going to start to play, catch up to this Bitcoin dominance? And what kind of trade ideas are we going to want to put on when, those alts really start to move as well? Because there's still, I think, a ton of juice in that space. So I'm very excited for the live event tomorrow at 2. So if you're able to join us, please do. JC is going to be there with some special guests, and it's going to be a great event.
You know what I love about all this, and what we're going to talk about tomorrow, which I'm super stoked about, is that we get like as much data as we have in traditional finance. Like we have, especially like us, like specifically, who like literally go out of our way to get so much data. In crypto markets, it's a whole nother ball game altogether, because it's all transparency. So like we don't have to like trust the auditors or trust the SEC, or like we don't have to trust anybody. It's just code. So the amount of code that we have and we can track the most successful wallets and, track the least successful wallets and see what the dumb money's doing in real time. So I wish we had this sort of thing in traditional finance, which we obviously don't. That's probably what I'm most excited about. It's just like, new data that we have, but we're going to share it with everybody else. But it's just stuff that we don't get to do in traditional finance, which is, and like the odd lot stuff from the 1960s that Merrill Lynch came up. This was a great indicator for decades. And then came the decimalization of stocks, and that's it, data gone. So that was a bummer. Well, now in crypto markets, it's back, and we got the odd lot data again, and we'll have it forever. Maybe not forever, I don't know, but we certainly have it now. So that's what I'm most excited about.
So this live event, which you mentioned, will not be on YouTube. It is free, but it will not be on YouTube. That's why I put the link in the chat and on the screen with the QR code and in the description below. So just drop in your name, your email. We'll send you a link to
You're
watch.
making people sign up. They can't just go to the YouTube.
No, we're not going to do it on YouTube.
My daughter has her own YouTube now. We set it up like with no commercials, and it's different because she says daddy's shows are boring, because I watch like podcasts and stuff like that. So she doesn't have to worry about daddy shows anymore. She's got her own YouTube. She's very excited about it.
Yeah, you probably want this separate YouTube for the child.
Oh,
So
should have done this a long time ago. My algorithm's all screwed up. You got like Bounce Patrol, and then you got like, Howard Lindzen podcast. Like, it's just not good.
I'm sure.
Can I update our viewers on one other trade from the last couple of weeks? I've been talking about Hood, which Strazza very much against. I think JC, and this is that laggard trade, that trash trade, right? And so wanted to just update people, just because I've talked about this a couple of times. My area of interest for this trade was right up to that VWAP that's shown there. That's from the IPO. And if you also anchor a VWAP from the all-time high, it comes in right at about that 1610 area. So I took money off this trade yesterday. I've left some left to go, just the FOMO of what if it goes higher. But I took a chunk off yesterday because
shout out Mary.
Went into my trade. Yeah, went into my target.
We gave you shit for this one.
Yeah, you did.
Gave you shit for this
A
one,
lot.
and you took it. You nailed it. Good for you, Mary. Good for you.
I learned
Nice
from the
trade.
best, so what can I say?
I appreciate that. I appreciate that. Nice work, Mary. Nice work.
Thank you.
Very nice trade. Someone in the chat, Michael's asking about Riot. Yeah, it's not playing ball with the rest of the crypto complex right now.
I mean, it ran up to those former highs like Mara. Mara's doing slightly higher. Mara's slightly outperforming Riot. That's about par for the course. That's how kind of they've behaved for at least the last year, where Mara's kind of like the slightly better one, right?
Yeah.
That's about right.
All right. I don't know. I don't.
No
watch
particular reason necessarily. I don't know particular
yeah.
reason, but
I
yeah,
don't watch the
Mara
miners
usually
as closely,
outperforms.
but yeah.
I'm
All
sure
right.
there's something there. I've done some of the work.
Yeah.
It just does.
Okay.
Hit the bumper, Spencer. I got nothing. I got
Nothing.
I got crypto. I got these. I got my raccoon problems taken care of. Spencer saw my situation yesterday.
I did.
So-
I think you kind of overhyped it a little bit. I mean, there are some scratch marks and all that on the thing, and maybe they got to your trash a little bit, but it didn't seem like it was a
Not an infestation.
all those marks were done in one night, dude.
Hmm.
Oh, all right. Well,
That was a
all
lot.
right. Yeah, it's a lot for one night. I want to get to Mary's recess. Mary has a good recess here.
I have weather whiplash.
Can we please bring up what slide is this? Slide 7.
So
And then-
it's very unusual in Michigan. We've had kind of a mild winter, and yesterday we hit 71 degrees in Grand Rapids, which is crazy. It was the highest record temperature record to date for February. 71 in Michigan is insane. And then within the course of about 6 to 12 hours, I mean, I've got an inch of snow on the ground right now. So we just had this weather whiplash. My kids were out in the yard last night in bathing suits with the hose and all the things. And now I've got a winter weather advisory for snow and wind. And we had these massive storms roll through. I wasn't even sure if I was going to be on today because I wasn't sure if I'd have power. But tornadoes and all the things. So I've weather whiplash.
How often do you see this? 71 degrees winter weather advisory, right?
Right.
That's an incredible screenshot.
71 to down to 20. Yeah.
God, I do not miss the
good old Michigan.
The bipolar Michigan weather. Oh my
super
lordy.
Bipolar. Yeah.
Especially this time of year in March too. You guys are going to get another heat wave and then one last run down to the 20s.
Yeah, actually I think next week we've got another 60 or something. It's been super unusual, and stuff is starting to bloom, which in Michigan is a problem because it kills like the apple crops and the peach crops if those blooms get a frost, and stuff is starting to grow, and it's
We'll mess with those Michigan apples. Don't mess with them. You don't mess around with that.
Or the cherries.
Or the
blueberries.
Yeah.
Yeah, we have so many crops. Yeah.
All right.
My recess. Are there a lot of lions in Michigan?
A lot of lions.
Like is that why they're called the Detroit Lions?
No, there's no actual lions.
I was wondering. I was just wondering. There's no lions in Michigan. Just like there's no jazz in Utah or lakes in Los Angeles,
Oh, well, yeah.
No.
Well, those teams at least moved. Right, Spencer?
My recess is happy birthday. He thought I would forget. I didn't forget. Happy birthday, Alfonso. That's right.
Oh, happy birthday, Fonz.
Chart wizard
Shout out Fonz. Is Fonz 21 yet? Is he allowed to drink? How old is Fonz?
I had the reminder go off on my phone. I didn't forget about you, my man.
Oh, 27. He said 27
wow.
in the chat.
You look good. He looks good for 27.
He's so tall.
He is tall.
I did not expect that when I met him.
Yeah, he's got the tall guy game.
Yep.
Tall guy game is real.
Yeah.
Hey, JC, I had a thought while you guys were talking about fake meat. Do you remember back in the day when you did that Domino's bit where you went to Domino's and you tried a couple of different pizzas and you paired them with wine? Please, for all of us, let's put it out on, all the social. Please do something like that with Beyond Meat. I would love to see you try Beyond Meat.
Is there a fast food joint that's known for having the fake meat?
Well, you used to be able to get it at McDonald's. I don't know if you still can. You can buy Impossible burgers at the. You can buy both of them at the store.
You can get the meat at
go
the
to
store.
just-
Yeah.
I don't think
Just
I'm
go
going
to
to
the
do
store.
this. I don't think I'm going to do
Oh,
this.
it would be such a great bit. We would have so much fun watching it.
Maybe next time we're together, maybe we'll just do it, mess around. But
That's a good idea.
yeah,
Alright.
maybe we'll make Strazza eat it. Strazza will eat anything.
I'll eat it. I've eaten it before. It's not so
We'll do it.
terrible. It's like.
All right, you
it's not
guys
as good
eat
as
it.
the real
I'll film
stuff,
it.
but
I'll film. You
I don't
guys
want to
eat
eat it. I want to watch the reaction.
Yeah, me too.
Whatever.
All right, you guys eat it.
All right. Well, that's all we got.
All
I
right,
think,
that's our
so.
show. No hot corner today. Strazz is out, so no hot corner video on What the Thick, though, so stay tuned for that. And that's what I got. So thanks to our guest today, David Zarling. Thanks to Mary. Thanks to all of you in our chat. We'll see you later. Go make some money, all right?
Adios.
Adios.
Bye, guys.
I can't take no loss. I don't even know what it costs. I hit the ground, then I go